All right, so Tattooed Chef shareholders, it's almost Christmas again. Our second quarter earnings will be on August the 12th, okay, and it's going to be held after market close. So as soon as I saw this press release, straight away got on the phone to my agent and I cancelled my contract for that day. Job done. I mean, Tattooed Chef's earnings is pretty much a national holiday for me. So I've taken the time off. I'm going to be there and I'm going to live stream it. So make sure you guys clock it in your calendars to join me in the live stream. It'll be great to have you guys there. I mean, we streamed Q1, which went very well. We streamed Analyst Day on the 15th of December. That went extremely well as well. So we're going to keep the trend going. I mean, I'm in this for the long term, and I know most of you guys are in it for the long term as well. So we might as well keep this trend going. So what I want to do in this video is just do an earnings preview and share my numbers with you, because we have some numbers from Roth. Okay, so Roth Capital. Now, they've got their projections for Q2, but my views differ, as well as Roth Capital's projections. A gentleman, and I want to shout out Scott. Okay, Scott from my Discord, GWB, shared all of his projections up until 2026, where we're expected to generate $1 billion in revenue. That's what Stephanie Dykeman informed us during, I believe, the Jefferies conference. But he's also got his Q2 projections and his Q3 and Q4. However, I also think that Scott lowballed it. Okay, so I'm going to compare Scott's projections with my projections, and then in terms of our points of distributions and what we've accomplished so far in Q2, I'm just going to use Scott's because he's done a fantastic job in terms of rounding up where we're at, the distributors that we are targeting, and where we're at with that. So we're going to use that. So again, massive shout outs to Scott. If you do want to join my Discord group, the Patreon link is in the description below. Check us out. I mean, most of us are invested in Tattooed Chef, and we love to share information with one another. So it's a great place to learn and I guess grow over the long term as the company grows. But with that said, let's jump into it. So here are my projections. Boom. Okay, very simple. We're going to keep it nice and simple. All right, so for Q2 2021, I'm expecting $59 million. Facts. Like, that's where I'm at. All right, so I believe we can accomplish $59 million in Q2. In Q1, we accomplished $52.7 million. But think about the amount of doors we were able to secure in Q1 that's going to generate additional revenue in Q2. And of course, in the last quarter, we've achieved a lot more points of distribution, which we're going to see come into effect in Q3 and also in Q4. However, if you go back to the earnings call, okay, so Sam Galetti said that our new total store count by the end of second quarter is 7,477 stores and 40,275 points of distribution. So that was by the end of Q2. Now, that's going to count for something, okay? That's going to count for something, and I think that's going to reflect heavily in our top line. And I believe we're going to see a change of 69.50% from a year-over-year perspective. And that's my justifications for $59 million. Now, Scott has it at $52.1 million. So essentially, Scott believes that we're going to earn a lot less than we did in Q1. So this is why I said Scott, I believe, is lowballing it. I'm being bold. I'm going for it. 59 million. Let's see if we can't achieve this figure. Okay, so my full year estimates, I'm expecting 250 million. That's my estimates. I know the company raised their guidance to 242 million as a max. I think we're going to smash that and hit 250 million. But let me know in the comment section what your projections are, whether you agree with these. Do you think I'm lowballing it myself, or do you think I'm being over optimistic with my projections? Let me know in the comment section below. I guess, look, we're all estimating, it's all speculating, it's all a bit of fun. We'll see who's right. But let me know your projections in the comments below. It'll be great to hear what you guys have to say. So cost of revenue, look, I'm not going to shy away from this. I think cost of revenue is, we're going to see a big jump. All right, I've put cost of revenue down as 52 million. All right, so in the last earnings call, Sarah did mention that inflation, she referenced inflation, but of course, because we are vertically integrated, they were able to have a lot more control on the costing of goods, but there was an impact. So I do believe inflation will bump up our cost of revenues and many other factors as well. And I put it as $52 million. So that represents a change of 68% year over year. Okay. And then we've got gross profit. So that leaves my gross profit at $7 million, which is an 89% change from our previous year period. I mean, look at that. So our gross profit in Q2 2020 was only 3 million. You know, I'm expecting that to nearly pretty much almost double. All right, so at 89% change. But Scott's gross revenue is a bit more bullish than mine. He's got it at 12.5 million as gross profit. So it's a bit interesting. You know, I'm a bit more bullish on our revenues, but a little bit more bearish on the cost of revenues, whereas Scott's is the opposite. All right, so he's got it there at 12.5 million. So in terms of operating income or expenses, I think we're going to lose. I think we're going to lose 4 million there. Okay, I have it at 4 million. How I essentially arrived at that figure is I deducted stock-based compensation. So the stock-based compensation in the previous quarter, I believe, was about $3 million. So if you subtract the stock-based compensation, we arrive at minus 4 million. But of course, there could be more expenses going in. Of course, with operating income, you've got to look at your sales. And of course, we've added a lot more personnel to the team to grow the business. So I'm at odds. I really don't know what to expect from operating income and also with net income. So with net income, I put question mark. I have no idea. There's so many assumptions to put in place and I just can't put a figure on net income. But with Scott's estimates, he's got the operating income at negative 800,000 with a net income or net loss of minus 900,000. So that's an EPS diluted of minus 0.01. Okay. But for me, I don't know. I absolutely don't know. So we'll see what those figures are on the day. But if you look at Q1, it was a net loss of minus $8.2 million. But if you deduct a few things like stock-based compensation, completely tells a different story. And yeah, that remains to be seen. So let me know what your projections are in regards to operating income and also net income and also the EPS diluted in the comment section below. All right, so let's look at the branded points of distribution. So pretty much we're already in Whole Foods, Meijer, Stop and Shop, Albertsons, Sprouts, Public, Southeastern Grocers, Ingles, Miller's Market, and of course, as of most recently, Kroger. But with Whole Foods, we know we've launched 2 SKUs, okay? So he's put 2 SKUs times 506 Whole Foods stores in the US. Gives you that figure. Okay, so on May 18th we had 2 SKUs nationwide and they were the organic greens and the Vicini spiral. So that was according to the PR release by the company. And with Meijer's, so again we had the plant-based vegetable pizzas with the plant-based white pizzas and the plant-based pepperonis, which are now available in the frozen section at all Meijer locations. Okay, priced at $7.99 per 12-ounce pizzas. And if you times it by the amount of stores located in the US, that gives us a point of distribution of up to 762 stores. So in the earnings call, we should be able to get a good idea of where we stand with regards to Kroger, Publix, Sprouts, and the rest. Okay. Now, in terms of our projected points of distributions, Sam Gillespie informed us during the earnings call, and like I showed you already, that our projected points of distributions by the end of Q2 was 40,275. But that could have changed. All right, that could have changed, but we're going to keep it at those figures. And remember, our target by the end of the year is 65,000. So essentially, in Q3, we're expecting at least 50,000 points of distribution, which I think is easily attainable. If what Sam said is correct and we're already at 40,000 or even more, then essentially 50,000 by Q3 should be an absolute piece of cake. However, our estimates, or Scott's estimates, which I completely agree with, is about 64,000. But wouldn't it be incredible if we can pretty much come within touching distance of that target within Q3? I think so. I really do think so. And I'm more inclined to say I agree with the estimated points of distribution. However, the company have lowballed it here, 65,000 by Q4, so by the end of the year. But our estimates is 82,000. Let's swing for the fences. 82,000 is our estimated points of distribution. And we have to wait and see. So that's a combination of mine and Scott's projections for Q2. Let me know in the comment section below if you agree or disagree. And if you do disagree, let me know your projections in the comment section below. So I'm looking forward to Q2. In terms of stock price, I don't really expect anything to happen with the stock price. And to be frank, I don't really care about the stock price right now. I just want to see how the business performs and whether I was bang on the money with my estimates or maybe Scott was bang on the money. But regardless, I'm excited to be an investor in this company and let's see what we can do. So thank you so much for watching. I appreciate your time. Please make sure you smash the like button if you gain any value. And if you're new to the channel, make sure you hit that subscribe button and the notification bell to stay up to date with all of my latest video content, especially if you are a Ttcf shareholder. So thank you so much for watching. I'll catch you in the next one. Peace.